I got to start with the markets. It was an ugly May. It's been ugly the last few days, except for yesterday. Down 6% in May.
Yep.
A lot of outflows.
Yep.
You have, what, 12 million customers out there. What are you hearing from your customers now? Are they concerned? What's the state of mind of the retail investor?
I have always very much believed that the retail, a lot of people talk about the markets are driven by the institutional, the retail investors, but they're not. It's the institutional investors. And the retail investor has always been a lagging indicator in terms of what goes on. So when they should be trimming like into strength, they're adding cash. When they should be buying things on weakness, they are coming out of the market. The retail investors changed with that over the span of the last year or so. So we've had, hopefully, there have been a lot of lessons that they have learned. So I think part of this is the tariffs as well. So if the tariffs work out, there's going to be a tremendous amount of upside. People want to make sure that they still hold on to the position so they benefit from that. But they're no longer doing that blindly. And we see our clients trimming into strength, Bob, and they're moving that money into fixed income.
Yeah, well, that's why the yields are going down. I'm surprised by how negative the sentiment is here. These are people who watch all of the businesses, the retail and the big professional business. They think the tariffs have reached a turning point where this could go on for a long time, and that this could affect trading going into the rest of the year. Are you getting a sense of that from your clients?
Yeah, we're getting. I think they don't have quite the energy that they normally would have had with regard to like a positive rally. But the issue is, the biggest problem in the marketplace is uncertainty. Yeah. Well, I don't know how you get a bigger blanket of uncertainty than what's going on with the tariffs.
Yeah, I want to get into your competition because just before you, the next gen investment people were on, the Betterments and the Wealthfront been presenting here saying, hey, listen, the millennials are flocking to us, we're getting business, but those are your people too. Are millennials investing differently than the baby boomers? Are you pulling them in? Do you have the resources to be able to continue to grow that kind of business? They seem to think they're getting the business.
Okay. Well, yes, they're different from the baby boomers, but yes, we're also getting I think more than our fair share of that. 40% of all of our new accounts are millennials. 40%. Now, how do they invest differently? Number one, they don't have as much money. Number two, though, they very much involved with the technology side. They like buying and selling technology stocks. So I don't know how much they've learned yet because they don't have that much experience, but we're getting 40% of our new account openings are coming from millennials.
Yeah, race to zero fees. That's something that we go to race to zero on ETF fees, race to zero commissions that are out there. You're feeling that kind of pressure. So where do you get the money now to continue to make profits and grow and invest? How do you deal with that?
Well, number one, I heard about zero commissions back when I first started in 2001. I'm hearing about it today. I think the last 15, 16 years, there have been 7 rate cuts. Now, when you have a rate cut, what you're hoping is you're going to get much greater market share, you're going to put people out of business. The reality, that's not the case. You bring the price down, everybody matches you, and you still maintain pretty much the same market share, but you're making less money. So there's a common sense element with regard to that. That's one. Two, the second piece of that, though, is the way to offset issues with commissions is assets under management. And, we've got $1.3 trillion in assets under management now. That's the best. I can't imagine a better way to offset zero commissions than knowing how to manage your asset base.
China's very much in the news here. There's Chinese brokerage firms that want to open businesses here. Not quite yet, but they're right there on the horizon. Is Ameritrade interested in expanding into China? You're a very, very small operation there right now,
but
right?
We already have, and we think that's an important. If I'm a Chinese brokerage firm, I don't know how I would not want to be invested in the United States. And it makes sense for us to be well aware and have some exposure there. And that'll grow over time. But we've already started. We're there now.
We got to let you go, but you are one of the rare people out there. You announced you're stepping down from a storied football career. Yeah. One of the very few people in the world really successful in 2 difficult fields, finance and in football. Give us 20 seconds on what do they have in common, and what can you tell people about what it takes to succeed in both of those areas?
Okay, the leadership, the product is different. The product in the financial world is not the product in football. But the principles to be a leader, how you handle yourself under stress, how do you inspire your people, how do you motivate them, how do you have a clear, thought-out strategy that you can articulate, how do you monitor, how do you execute? Those principles are identical in the world of finance and the world of football. That doesn't change.